esteemed speaker today, Mr. Prasad Padala. With a robust academic background, he holds an MBA from IIM Ahmedabad and BTech from IIT Madras. He is also a chartered holder of CFA Institute USA. Prasad joined SBI MF as an equity analyst in September 2017. He currently has fund management responsibilities prior to joining SBI FM. He worked as an analyst with Investec Capital and Springforth Capital and PUG Securities. So yes, we are very excited to see this interaction forward. And over to you, Prasad. Thank you so much.
Yeah, thank you so much, Disha, for the kind introduction. Hello everyone. Welcome to the presentation. So let me quickly share my screen and okay, great.
Yes, it's visible.
It's visible, right? Okay. Okay.
Just
great.
Make it a full screen once again. Yeah.
Yeah. Okay, great. So let me quickly, introduce our thoughts in terms of the overall theme of the fund, and then we'll move on to the investment strategy. So when we broadly look from a top-down, right? We see basically innovation happening across sectors. If you think of, let's say, if you look at the US markets and then see companies like, let's say, Netflix or Tesla. And if you see the way they actually came up with innovative solutions, the innovative products, and then completely change the way how the market works. And then the incumbent companies had no choice but to follow these companies. So that is the kind of disruption that these guys have actually done. And we see that similar thing is actually happening across the world, even in India. And the good thing is that we believe that in India, we are at the cusp of that innovation cycle, where we believe that innovation will really accelerate over the next decade. And if you see in the US, like in the last decade, so most of these innovation companies are very it came up in the just last 10, 20 years. And if you look at the index composition 10 years back, there were many of these banks, auto companies, and some of the other traditional industries were there. Now almost 30-35% of the index is made up of these innovative companies. And we believe that something like that can happen in India as well. So in next decade will look very different in terms of the kind of companies which will take the leadership. And we want to be positioned along that theme, and we want to take investors along in that journey. So I won't spend too much of time in terms of some of the slides I'm showing, but we can come back during the Q&A. So we see basically the innovation overall is accelerating. So we see a lot of this. If you look at this slide, so innovation is happening not just in technology, right? So throughout the history of mankind, so we have seen these landmark events where the kind of innovation changed our lives. And the interesting part is that it is accelerating quite fast. So if you look at, in our generation, we have moved from, let's say, cellular phones and then computers, now smartphones. So, and then now with the artificial intelligence and drones and all that, things are accelerating quite a bit. And then we expect quite significant kind of changes in our lifetime going ahead. So this is another example of how we store data, how it is that changing, and another example in terms of how the overall, our consumption patterns are also changing. So this is another slide in terms of to show that with innovation, the disruption is also accelerating. If you look at S&P 500 index in the US, so before 2000, companies used to stay there as a leader in the top 10 for almost like 85 years. But now that leadership is changing quite fast. If you look at NVIDIA, for example, so they were not even in the top 10 until 5 years back. Now they are the most valued company. So these kind of trends are emerging quite fast. And then by identifying these kind of trends well in advance, we believe that there is a lot of value that can be generated for equity shareholders. And another interesting part is that if you think about innovation, generally people associate it with technology, but that is not true. We are seeing innovation happening across sectors, whether it is automobiles with the electric vehicles or it is financial services with the digital adoption, or it can be some traditional industry like energy or consumption, healthcare. I mean, you name the industry, there is innovation happening. And there are companies which are actually innovating and then gaining market share at the expense of companies who are not innovating. So we believe as equity investors, we want to stick to these innovators and then benefit from the kind of value creation that they are generating. So in terms of the fund construction, also I'll come to it later, but it will be more of a multi-sector fund. So we look for innovators across sectors, and we'll try to construct portfolio out of it. Then in terms of coming to India, so India, we believe is at the cusp of that innovation cycle, and we have actually listed down on some of the factors which we believe that we believe that India has all the right ingredients which are in place, like in terms of the favorable demographics, or if you can talk about the rising consumer market, the kind of the inflection point in terms of the per capita incomes, or you talk about the digital infrastructure that is getting built, or you talk about the government initiatives or the government push that is there in place. We believe all these factors will help the innovation cycle in India to kickstart. And we believe that the next 10 years will be completely very different compared to the past. And in terms of, so we just delve into some of these factors in the next few slides. Startup ecosystem, for example, I mean, if you see most of these startups, most of the business models have evolved in just in the last 5 years or 10 years. I mean, whether you talk about food delivery, quick commerce, for that matter, e-commerce, and most of the startups in this space in the slide have come into existence maybe just 5 years down the line or 10 years back. But we believe that these kind of new business models will continue to emerge. And then interesting part is that last decade, the most of the action took place in the startup space, where the prime beneficiaries were the venture companies. And we believe that most of these companies are now maturing and will come into IPO, into public markets through IPO. And we believe that public market participants will have an opportunity to play these companies over the next decade. And in terms of the demographics, I already discussed in terms of the kind of talent pool that we have, which is unparalleled compared to any other geography, or the strong digital infrastructure that is in place, which is the backbone for innovation. Or if you look at the consumer market, the kind of per capita incomes going in the sweet spot. Also, another interesting aspect is even the consumer market is also evolving. They are also adapting to change. So, for example, if you had asked me, let's say 10 years, whether I would pay extra for a cab compared to safer alternative like rickshaw, I would have said no. Or whether if you would ask me whether I would pay extra for a food delivery or a quick commerce, I would have said no. But now all of us are actually adapting to these kind of models where we're actually wanting more. So, for example, let's see, if consumers want electric vehicles, then the companies don't have a choice; they'll have to launch. So even the incumbent companies, let's say like Maruti or Hero Motocorp, so these companies are also seeing those trends emerging, and so even they'll have to innovate and launch these vehicles, right? So they actually they cannot ignore the what consumer wants. So we believe that the innovation is happening from the new age companies, but also it is happening, and the incumbents, the existing players are also will be forced to innovate, which will only accelerate the whole cycle. Again, government initiatives we already talked about, and the strong funding ecosystem. More and more FDI money is coming in our way, which is only fueling the innovation. And to talk about some of the themes that we're bullish on, so quickly, e-commerce is one obvious thing. So that has actually played well over the last few years. But we still feel that there is a lot of runway to go because even now, e-commerce is just 7.5% of the overall sale, much lesser than what it is in geographies like China and US. And the key beneficiaries would be companies like food delivery, online fashion, etc. So these companies will benefit. And ad tech is another theme that is picking up. Cloud computing is another theme that has played out well over the last decade, but we still believe that there is a lot of runway for growth. And electric vehicles is another thing that we discussed. And again, fintech, which is something that we're all aware of in terms of how consumers are adopting these digital transactions. Consumers are comfortable in buying, let's say, insurance online or mutual funds online. So this is again something that is a trend that is picking up quite fast. So finally, clean energy is another thing with the kind of right push that we are seeing, the kind of adoption we're seeing. So this is another sector, another theme that we believe is will play out. So coming to the fund. So in terms of when we define innovation, so there are primarily three categories of companies we talk about. So one, a product or a service innovator. So these are companies which launch innovative products or services either through their own R&D or playing on an existing innovative theme like an electric vehicle theme or something like that. So we'll actually in the next few slides we'll talk about one example for each of these buckets. But to quickly summarize, so first bucket is the product or service innovator. The second bucket is the process innovator. So process innovator are companies which need not have an innovative product or service, but just by innovating on the process side, they are able to gain an advantage over their competitors. Finally, innovation adopters. So these companies need not be the first ones to launch a product or a service. For example, you need not be the first one to launch an electric vehicle in the world. But if you actually see the trend emerging, and if you adapt to the trend and are able to benefit out of it, that is an example of an innovation adapter. So in the next three slides, we'll quickly look at one example each to just get a better sense of it. So product or a service innovator. So here we're talking about a pharma company. So unlike most of the pharma companies in India who are playing on the generic drug space, where somebody else innovated, but you just copied the product and selling it for a lesser price. So this company, so they started developing their own chemical entities. So they started going into the patented drug segment. And from FY19, they've actually seen a traction in this particular segment, which actually helped that segment grow at a very rapid pace. And also because these products have a higher gross margin and higher realizations, it also helped the company improve their overall margins. So this is an example. So thereby the company got re-rated, the perception has improved, and the stock has actually did very well. So this is an example of how companies can actually generate value even by innovating on a smaller niche within the overall portfolio of their products. Also, we have some of the companies where the entire portfolio could be innovative. So those, I mean, imagine what kind of value those companies can generate. Second is an example of a process innovator. So process innovators are like here we are talking about a delivery company. So delivery is again has been there since a very long time, not a rocket science. But this company was able to use innovative processes. They were able to use technology. They were able to use differentiated algorithms, delivery algorithms, to increase the efficiency of their drugs, to decrease the overall cost of their delivery, thereby creating the niche over their competitors. So because of this, so they were able to gain almost double the market share of their competitor, nearest competitor, and have been growing at a much faster pace compared to its other competitors. So this is how companies can generate value just by innovating on the process side, although they need not have any innovative products. The third is an example on an innovation adapter. So this is the food delivery company. It's Zomato. That's the orange line out there. So if you look at it, before FY15, they were not even present in food delivery. But when they saw that this thing is picking up, then they were quick to adapt and then they were quick to enter. But when they entered, Swiggy already had 75% kind of market share and there were already 10 other players. But they were able to gain market share and became a market leader. So this is an example of companies who show that agility. So even though they are not the first ones to start a trend, but if they adapt early, they can actually create value. I mean, it can be true for, let's say, electric vehicle, for example. So somebody in the US somewhere innovated and created electric vehicle. But let's say in your market, then you actually adapt to the trend early and you are able to gain out of it, then I think that itself, that those kind of companies will fall under this bucket. So this slide shows in terms of some of the qualitative and quantitative factors which we use to identify these companies. So some of these factors could be one, whether they are using these new technologies like automation, AI, etc., to reduce their overall cost or increase their efficiency. Second, whether they are constantly launching new innovative products or services. Third could be whether they are spending enough on R&D. Fourth could be whether they are demonstrating that agility to adapt new technologies or business models. Fourth could be whether they are making strategic investments in the emerging areas. So, for example, let's say if it is I mean, you are a market leader on the traditional IC engine side. Let's say you are a Maruti or you are a let's say Hero Motors or Bajaj. But when you see electric vehicle as a trend picking up, so either there are two ways to respond. Either you close your eyes and say that this doesn't work, or you make the investment in that area and you be ready to when the trend picks up. So we'll prefer companies who are actually showing that agility and investing in the emerging market and in those kind of emerging verticals. So finally, the company should be able to generate some kind of sustainable competitive advantage by through these innovations. So coming to the portfolio construction approach, like I said, it would be a multi-sector, market agnostic kind of a fund. So at least 80% of assets we aim to invest into these innovative companies. We kept this 20% as a leeway, but the idea is to invest as much as possible. I mean, we want to be true to the label, so we want to identify these two innovators and then invest into them. Because we strongly believe in this thing. So, for example, if you look at the US market, in the last 10 years, most of the companies that did well will fall into this innovation bucket. So, we believe that even in India, I think it will similar thing will happen. Of course, there are points immediately after the IPO where the stocks were IPO at the time when they came to the IPO, they might be expensive. But after that period of 1 2 year, then I think the real earnings growth will start picking up. That is when you actually make money in these kind of companies. So we believe that from starting from the now on, we believe that there is a lot of value that can be created out of these companies. So in terms of portfolio construction, it would be a completely bottom-up kind of portfolio construction. We have more flexibility in terms of our sector allocation. We can even so idea is to have 35 to 40 stocks diversified across sectors. And in terms of companies that we like, we will be looking for resilient business models with strong competitive advantages. We'll be looking for high growth companies and we'll look for longevity of growth, companies which can grow for 10 years, 15 years, ideally. And also we'll look for companies which can generate strong cash flows and return on equity in the long run. So they could be making losses in the initial periods of their life. That is fine as long as we believe that the business itself has the potential to generate superior cash flows when the business model matures. So we'll actually look case to case basis. We look at the unit economics, the unit level profitability to take a decision in terms of whether the business has the potential or not. So finally, we'll also look for reasonable valuations. I mean, it's not a buy at any price kind of value strategy, but we look for reasonable entry points. As long as we can, the growth potential of the company can justify the valuations, we'll only look for those kind of those pockets of companies. So finally, in terms of suitability, so this is a slightly, I mean, thematic fund which is more focused on the upcoming trends and disruptive businesses. So the time horizon should be slightly longer than average. So it would be more suitable for investors who are looking for capital appreciation and are have a slightly longer time horizon, at least 3 to 5 years. So that's the kind of investors this will be suitable to. Yeah, I'm done. If we have any questions, we can take it.
Yeah, sure, sure. So yes, thank you so much, Prasad, for the wonderful brief given on SBI Innovation Fund. And I'm sure all our partners have taken a note of it. And some were the really useful information which was conveyed by you. So definitely it will be further conveyed to our client as well. Moving further with the Q&A part, and whereas I have received few questions from all our partners. So let me just display it to the screen. Just give me a moment. Yeah, is this slide visible to you?
Yeah.
So, yes, I'll just read out for everybody's convenience. So, my first question to you is, what sector does the SBI Innovation Fund primarily focusing on?
Sure. So one thing I want to clarify is that we are not excluding any sector. But in terms of the focus, I mean, if you actually look at the universe of stocks, so primarily it would be technology would be one major sector. And then there would be a lot of consumer internet names, like the kind of platform companies that you are seeing. It could be consumer companies who are selling on internet. So that is the second set of companies. And then you also will have a lot of pharma companies and industrial companies and auto companies. So these will be the primary sectors. But having said that, even in other sectors, the way we are defining innovation. So suppose let's say sometime back when Domino's started this 30 minutes delivery, that time it was an innovation. So that it is not like a very high tech kind of a thing, but that actually gives them an edge. So it can be a very simple innovation that can happen anywhere. So Bajaj Finance, for example, when they came up with this instant loan kind of a thing, which enabled people to, when they are on this in the store, they were able to use this and then use that EMI to purchase. So that itself is an innovation. Of course, later it gets copied and then commoditized. Then they don't have an edge. But that period when they actually came up with this innovation, so they actually had an edge. So this can happen in any sector. I mean, it can happen in a commodity sector where a company is coming up with some kind of innovative processes and gaining an edge, or they might be using, let's say, robotics in their manufacturing because they are different from other. If everybody is using, then there's no point. Suppose let's say if everybody is using digital banking, so all the banks have digital banking. So that's not an edge, that's not innovation. But if there's something somebody is doing which is different, then we can definitely consider that. So that way we don't exclude any sector, but in terms of composition, to answer the question, these five sectors that I mentioned, so though they will contribute higher proportion compared to the others.
Thank you. Thank you for the precise answer. Yes. Moving to next. So my next question to you is, what criterias are used to select company for investment in the fund? So I think you have already touched upon in many of your slides, but please throw some light on the same.
Yeah, so we look for basically, I mean, innovative companies based on the three parameters I mentioned, whether it can be a product or a service innovator, or it can be a process innovator, or it can be innovation adapter. So once you get the universe, and then we'll do a bottom-up approach. There we'll be looking for companies with strong business models, where we believe there's a lesser chance for disruption, and companies with high growth potential, and companies where which can actually make high cash flows in the long run, and finally at reasonable valuations.
Perfect. Thank you. Thank you once again. Moving to next question. What are the key performance indicators used to elevate the success of the SBI Innovation Fund?
Yeah, so obviously we look at the risk-adjusted returns. So one, I mean, returns is obviously something that is paramount, and also we look at the kind of risk-adjusted kind of returns. Yeah, ideally we look for, lesser volatility, and then as long as we can deliver returns with risk on a risk-adjusted basis, that is what we aim to do.
Yes, absolutely. Thank you. So moving to next question, what percentage of the fund is invested in the domestic or international companies?
Yeah, this is actually, thanks for bringing this up, because actually I forgot to mention this during my presentation. So we have kept a 35% leeway to invest into foreign stocks. So right now, obviously, there are RBI limits which actually restrict us to do so. So we have internal limits, but they're already full. So either we get it from internal other funds, or we get it if the RBI relaxes the limits, which actually we made representation to RBI. Maybe Kunal can talk about it more. But if that happens, then we can really create a differentiated portfolio, because most of these innovative companies are listed abroad. For example, if you look at hydrogen as a theme, most of the beneficiaries are listed outside. So, and also if you look at it, probably we have the widest coverage on street in terms of these companies. We have many of these names already in our portfolios. And I personally was actually working out of US for the last 2 years, met many of these companies, attended a lot of these conferences, and in regular touch with them. And also we have Amundi as a partner, which has a global capability, global research. We can definitely make use that of their research to supplement our research. Yeah. So whenever I think the limit opens, so we can make full use of that 35% leeway, and we can truly create a differentiated portfolio out of it. Kunal, do
Yes.
you want
Thank you.
to talk about?
Yeah, Vatsal here. Kunal is just dropped out for another. He's got a call, urgent call. But ma'am, just to answer you, we have made strong representation with RBI for increasing the limits, and we are having certain positive responses. Let's see how it works out. We're expecting some kind of a leeway for this fund. Thank you.
Okay. Thank you. Thank you so much for bringing the clarity. Thank you. Yes. Moving to next. So, how does the fund balance the short-term volatility and long-term growth perspective?
Sure. So, like I said, I think this fund you need to have a slightly longer time horizon. I think you should be okay with short-term volatility, because this is something that inherently, if you talk about innovative companies, so inherently they come up with disruption risk. So, for example, let's say if I take an example of Zomato itself, so always there is a constant concern that what if somebody else enters the market? What if Amazon enters the market, or Flipkart enters the market? Or what if, let's say, ONDC becomes big? So there is always that constant worry. And then because of that, there would be uh,
Kunal, I think you have dropped off. Can you please check from your side?
Yeah. I'll just check one second. Vatsal, I'll just check one.
Yeah, sure. Yeah, so dear partners, we have a Prasad back with us. Yeah.
yeah.
Please continue.
Yeah. Sorry, apologize for that. Some
No,
issue with
absolutely
my
fine.
laptop. Yeah. So what I mean is, so inherently you'll have this volatility, but I think the returns are like proportionally juicy as well. So I think you should be okay to, when you invest in these companies, I think you should actually be okay with the short-term volatility. So that's why we advise this product to investors who are okay with the short-term volatility, who have a slightly longer time horizon.
Perfect. Thank you so much. Moving to next question. What type of investor in SBI Innovation Fund most suitable for?
Yeah. So like I said, so I think for people who have a longer time horizon, so who understand the theme, and then who knows that actually they are investing in these new age companies which are inherently more volatile, but have the potential to generate capital appreciation over the long period of time.
Yes, certainly. So it is suitable for long-term investors for sure.
Yeah.
Yes, so I think this is it from our side. There are no further questions. So, yes, thank you once again, Prasad, for coming on the board and explaining us how the SBI Innovation Fund will basically work. And yes, with this, we can conclude today's session. I would like to extend heartfelt thank you to you, definitely to your team as well, for sharing the invaluable insight and expertise with all of us, and extensive experience and deep understanding about the financial market which you have provided to us. It's a real wealth of knowledge to us. Thank you once again for coming on this platform, sparing your time with all our partners. Thank you. Thank you for such enlightening presentation.
Yeah, thank you so much, Disha, and thank you everyone for joining the call.
Thank you. Thank you all the partners, our dear colleagues and team SBI EMC once again. Thank you. With this, we are concluding the session.